Welcome to this introduction to Veterans Benefits. My name is Thomas Day. I am the director of the Senior Veterans Service Alliance, and I have put together this training course on accreditation from our organization for your benefit. We are a nonprofit corporation that educates all veterans about their benefits with particular emphasis on senior veterans who represent about half of all living veterans. Generally, members of our group do not help individuals with claims, even though some of us have accreditation authority to assist with applications. If visitors to our website at www.seniorvets.org express an intent to file applications for benefits, we will find someone who is accredited in their area to help them. We are not a VA-recognized service organization, nor are we affiliated with the Department of Veterans Affairs in any way. In addition to our freely educating about benefits, we also provide formalized training materials. This includes continuing legal education courses for accredited agents and accredited attorneys, a comprehensive 498-page handbook on how to make application for benefits, and a very intensive accreditation training course which you are currently participating in. This 60-minute narrated video slide presentation covers most of the benefits that you will encounter when you become accredited. Accredited representatives of service organizations, accredited agents, and accredited attorneys generally do not deal with other veterans' benefits such as education, loan guarantee, health care, insurance, and many other benefits for which other specialists are available. In this presentation, we will cover the benefits which represent the majority of claims that accredited individuals deal with. We will introduce disability compensation, pension, dependency and indemnity compensation or DIC, aid in attendance or housebound allowances, and burial benefits. We do not cover in this presentation the modernized review system under the Appeals Modernization Act of 2017. Be assured, however, that the course itself covers this process of challenging unfavorable decisions in enough detail. I will also spend a few minutes talking about veterans' health care. Please note that in this video there are two of us who do narration. We also refer to previous modules and training issues that are not contained here. That is because we have pieced together this presentation with bits and pieces from our other training materials of much longer duration. So please don't be confused. In addition, we frequently mention the presentation is available in PDF slide form. This is true. The presentation slides you will encounter in this video are found on the flash drive that you received with this course. They are meant to help you easily go back and understand the concepts without having to play through the video and try to find the particular issue you are looking for. For those of you who are new to veterans benefits, I hope this introduction will help you gain a better understanding of what it's all about. Introduction to Disability Compensation. We discuss in the textbook that comes with this course who a veteran is and who is entitled to veterans benefits. Here are the three rules for establishing a claim for direct service connection disability compensation. First of all, you have to establish evidence of incurrence of illness, injury, or aggravation in service. Establish evidence of a current condition or disease with continuity of that disease back to service. And number three, establish evidence that the incurrence in service caused the current condition or disease. If it's a presumptive service connection claim, then number three is not required, it's waived. You see also here the disability compensation rate table. That's current in increments of 10%, and these are the amounts that are paid. There are three types of claims. These three types are service-connected claims, presumptive service-connected claims, and secondary service-connected claims. I discussed the 3 requirements for entitlement to direct service connection in the previous slide. Generally, to establish service connection, there must be evidence of a continuity of symptoms from discharge. But this is not always the case, as some conditions only show up many years after discharge. I will discuss these claims with late manifestation further on and how we get around the requirement for continuity of symptoms. Some current conditions are presumed to have been caused by service, and as a result, only the first 2 requirements listed on the previous slide are needed for entitlement. The current condition is automatically linked to service. You don't need the 3rd requirement to prove a nexus. This type of claim is called a presumptive service-connected claim. Pause the presentation here to read more about presumptive service connection. I will discuss this in more detail further on. Often, a service-connected condition will result in a disability or disease that was not incurred in service, but because the service-connected condition caused it, VA will also pay a benefit. This is called secondary service connection. I will discuss further on the evidence required for these 3 types of claims. On the preceding slide, I discussed the first requirement for determining service connection. This is the second requirement for determining service connection, manifesting a current disease or condition that is related to service. No matter which kind of claim that is filed, direct service connected, presumptive service connected, or secondary service connected, the claimant must have a current disease or condition that is disabling or chronic and requiring treatment. It is possible to establish service connection for a current condition which flares up from time to time, but the disability rating will be 0% except for the times when the flare-ups occur. Exactly when the diseases or conditions show up is an important issue. For certain presumptive conditions, symptoms must manifest to a rating of 10% or more within a year of discharge. With other presumptive conditions, symptoms can show up at any time. Some direct service-connected disabilities have symptoms that show up many years after discharge, and some show a continuity of symptoms over the years. For secondary service connection, not only does the claimant have to have a current condition or disease or chronic disabling condition, but a medical opinion is required to establish the connection between the currently rated condition and the new condition that is secondary. I will discuss further on the evidence required for each of these types. Here is the 3rd requirement for establishing service connection. You must establish a link between incurrence in service and the current condition. This is often called the nexus. For presumptive service-connected claims, there is no need to establish a link between the incurrence in service and the current condition. You don't need this 3rd requirement. The link is presumed if the claim is for the 120 or so presumptive service-connected conditions listed in the regulations. However, evidence must establish that the claimant had the particular duty assignment or was in the particular location in order for the presumption to apply. For direct service-connected claims, establishing a link between the injury, illness, or aggravation that occurred in service and the current condition is generally the most challenging part of a claim for compensation. Where there is a continuity of symptoms from discharge to the present day, establishing that link is not that difficult as long as the claimant can prove the incurrence in service. Where the condition shows up later in life with no continuity of symptoms, as with older veterans, the challenge is much greater and often requires a medical opinion to establish the link. For conditions which could be assumed to be related to combat duties, such as issues with joints, muscles, or other obvious combat injuries, establishing the incurrence in service usually only requires the word of the veteran and not actual physical evidence. Also, establishing the link for service connection is much easier for combat veterans. Evidence for establishing secondary service connection almost always requires a medical opinion. You see here all of the evidence that adjudicators in the regional office will consider for making a decision on a claim. You can stop the presentation here to study this in more detail, or you can later go to the PDF slides to study all of the material in this module in more detail without having to run the video. For certain claims, medical opinions from licensed healthcare providers are required to establish service connection. There are two types of evidence here which claimants or their representatives often overlook, but which are very important for a convincing claim. The first of these is a certified lay statement from the claimant or certified statements from buddies in the service or from a spouse. Court precedent rulings give a great deal of probative weight to credible and well-documented lay testimony. The second type of evidence that is often overlooked is corroborating evidence from competent medical literature, not just some article off the internet, and from employment and personnel records where these are relevant. Medical opinions from licensed healthcare professionals are often needed to establish the link between a current condition or disease and the incurrence in service. The person providing the opinion will state that it is at least as likely as not that the incurrence in service directly led to the current disease or condition. A medical opinion requires not only a statement for service connection, but also justification for the opinion. That's very important. We discuss medical opinions in great detail in the textbook and provide samples in the case studies. I have listed here some of the various reasons as to why a medical opinion would be needed for a claim decision. Claimants can obtain their own medical decisions or allow VA to order them. Allowing VA to order a medical opinion often results in an unfavorable decision. VA contract medical examiners are hampered by the system under which they operate, and as a result, their medical opinions are often inadequate and incomplete and don't include any reasoning for the opinion. Pause the presentation here to view the various reasons for needing a medical opinion. Presumptive conditions that must manifest soon after discharge. Previously, I addressed presumptive service connection where certain medical conditions or diseases that show up after discharge are presumed to have been occurred in service, and there is no requirement to establish service connection. It is automatic. There are about 120 of these conditions depending on the duty assignment or the duty location of the veteran. The conditions listed here must have manifested within 1 year of discharge to a degree of 10% disability or more. I did not include the list of tropical diseases here, but it is the same requirement. There are a few exceptions, such as Hansen's disease, which follow different rules for when manifestation must occur. The previous slide included conditions that had to show up soon after discharge. The next two slides are presumptive conditions that can show up at any time after discharge. However, with one exception, the veteran had to be in the correct place at the correct time. Either the duty assignment or the duty location are responsible for these presumptive conditions. There is one exception, and that is ALS or Lou Gehrig's disease, which is an automatic award regardless of where the veteran was assigned or what the veteran did. Exposure to ionizing radiation is necessary for the presumptive conditions listed here for ionizing radiation. A number of veterans were involved in atomic bomb testing or perhaps other radiation testing in the 1940s and 1950s. Or, as another example, exposure to ionizing radiation in service could have been a result from working around X-ray machines in the medical corps. The most common applications for presumptive service connection are from veterans who served boots on the ground in Vietnam or in the inland waterways, or on certain ships that were anchored offshore. All of these people were assumed to have been exposed to herbicides used during the Vietnam conflict from 1964 through 1975. One of the most common of these herbicides was called Agent Orange. There were well over 3 million service members who served under these exposure presumptions. Other exposure to Agent Orange could have occurred on air bases in Thailand and on the DMZ in Korea. Up until 1986, active duty personnel and reservists who flew or worked around C-123 aircraft that were used to disperse the herbicides are also eligible for Agent Orange claims. Many of these conditions will show up well after discharge, and for many Vietnam veterans who are now in their 70s, many of these diseases or illnesses are just starting to manifest. This would include certain cancers such as prostate cancer and leukemia, type 2 diabetes, heart disease, and Parkinson's disease. VA is even considering adding high blood pressure to this list. For veterans who served in the Gulf War beginning in 1990 and primarily in Iraq, there are a cluster of symptoms that seem to be related to this service. It isn't necessarily one of the symptoms, but a combination of them that is defined as so-called Gulf War illness. The symptoms had to have manifested during active duty and lasted at least 6 months. Congress has on several occasions mandated an expiration date for filing for these claims, but just recently Congress has extended filing a claim up through December 31, 2021. Anyone stationed at Camp Lejeune, North Carolina from 1953 through 1987 was exposed to cancer-causing hydrocarbons in the drinking water. Any of the conditions listed here that manifest at any time are considered presumptive for service connection and will result in an award for benefits. We recently had a DIC claim related to a veteran who died from one of these conditions and who was stationed in Camp Lejeune at that time period. He was never able to make a claim, but his wife is now receiving a little over $1,400 a month as a result of his service-connected death. I have not expanded out the other presumptive service-connected conditions that I list here, but be aware of them. They include mustard gas or lewisite exposure, conditions due to being a prisoner of war, Afghanistan war illness, and a recent controversial issue known as burn pit exposure. Iraq and Afghanistan war veterans are presumed to have been exposed to harmful substances from very large burn pits that were used instead of landfills to dispose of all kinds of unwanted waste material from bases in Iraq and Afghanistan. This exposure has resulted in development of certain conditions.
Compensation and Dependency and Indemnity Compensation DIC, covered in Modules 3 and 4, are not means tested. In other words, VA does not scrutinize a claimant's personal income and assets if they are applying for or are in receipt of compensation or DIC. With VA pension, however, there is an income limit for entitlement, as well as a net worth limit. There are many combinations of income limits depending on certain medical ratings, like housebound or aid in attendance, and whether the claimant is a veteran, a surviving spouse, or if there are dependents like a spouse or child. Here are some commonly encountered income limits. If gross household income exceeds the limit for the particular situation, there is no benefit. Here you also see the current net worth limit. Net worth means the sum of a household's assets and annual income. If net worth exceeds this limit, there is no current entitlement without making special deductions. The income and net worth limits increase each December at the same rate as Social Security's cost of living adjustments, the COLA, and parallel Medicaid's Community Spousal Resource Allowance, the CSRA. Remember, a veteran household cannot receive pension and compensation at the same time. Likewise, a surviving spouse cannot receive both survivor's pension and DIC at the same time. A decision must be made as to which is the better fit. Fortunately, the beneficiary may switch back and forth between the two. Here is the current rate table and 5% deductibles for a living veteran. This table is available in the How to Apply book, as well as the Claim Support Disc. We update the rate tables every year. These income limits are called maximum annual pension rates, or MAPR. Here is the current rate table and 5% deductibles for a surviving spouse or dependent child. This table is also available in our How to Apply book as well as the claim support disc. Remember, all of these detailed slides are available to you as PDF slides in your CLE training disc. Here is a list of the most common types of incomes to be included in an entitlement calculation. Income is virtually anything in the form of cash or cash equivalent that a household receives each year. This includes all forms of recurring income such as W-2 income, Social Security, employer pensions, annuity contracts, and other recurring monthly income. Income also includes withdrawals from tax-qualified retirements, such as IRAs, 401k, tax-sheltered annuities, and others. Unfortunately, VA does not allow for withdrawals to include the original principal amount that was put into these accounts as a conversion of assets. Everything that comes out is considered new earnings and counted as new income. Gifts, inheritances, liability settlements, and gambling earnings are also considered income by VA. It is important to note that any existing VA benefit, to include disability compensation, VA education benefits, and DIC, as income for determining pension entitlement. Royalty payments are not considered income but are conversion of the underlying value of the asset. For royalty payments like oil wells, sometimes it becomes a challenge to determine the net value of those payments over the life of the lease. Child support payments to the custodial parent are also income. Net business earnings, earnings from investments, as well as profit from the sale of a business or real property are also income. Interest on savings accounts, U.S. government bonds, and certificates of deposit are not considered income, as interest is automatically added to the account value. Income sources other than Social Security, including bank interest, no matter how small, must be shown on Form 21P-0969, the Income and Asset Statement. Here are the most common income exclusions. The more complete list is found in our How to Apply book. Any income benefit based on financial needs such as SSI or Medicaid payments, proceeds from a loan of any type including reverse mortgage, VA pension income and pension back pay and accrued benefits, withdrawals from savings, CDs, interest on IRAs or a surrender of a savings bond, life insurance proceeds or surrender of cash value that does not exceed total premium, value of a claimant's ongoing household maintenance costs, or debt provided for free or paid by a caregiver. Any insurance reimbursement that are used to replace an out-of-pocket cost or a loss, and income from the sale of a property that represents a conversion of that asset. However, profit from the sale will likely be considered income. Aided attendance and housebound ratings are special disability ratings covered in 38 CFR Part 3. These ratings allow for additional income to be paid with compensation, DIC, pension, and SMC. Getting an aid attendance rating is often vital for entitlement to pension. Most of the claims we see involve ratings for aid attendance. We seldom deal with housebound ratings, as they are not likely to generate entitlement due to a lack of medical deductions for those who are housebound. The aid attendance rating generally requires assistance with 2 or more activities of daily living, called custodial care, or alternatively, it is awarded to a patient in a nursing home, someone who is nearly blind or bedridden, or who has a mental or physical incapacity that represents a hazard. As part of the process of establishing a rating for aid attendance, a licensed health provider must fill out VA Form 21-2680. The aid attendance rating produces the largest maximum annual pension rate, or MAPR, for any given category, and is also required for deducting certain medical and care expenses. When a veteran is in receipt of pension with aid attendance, VA calls this special monthly pension. In the next slide, we will discuss the calculation for determining entitlement amounts for pension with an initial application. Fortunately, there are certain allowable medical expenses you can deduct from income during an initial claim. This includes the future 12-month sum of health insurance premium, Medicare Part B, long-term care insurance, and Medicare supplement plans and Advantage plans. In addition, the sum 12 months of estimated recurring care costs to include home care, assisted living, nursing home, and under certain circumstances independent living, are also deductible. Also, finally, any other future medical costs that can be proven to be recurring, such as monthly use of a hospital bed, oxygen, and a wheelchair, and so forth. Once on claim, just about all out-of-pocket medical expenses can be retroactively deducted to possibly increase pension income, if it is not already at the maximum for that year. This slide demonstrates a number of issues associated with an initial application. Anytime you are helping a veteran or surviving spouse apply, you will have to go through a similar exercise to determine eligibility and what the rate might be. This exercise demonstrates how most individuals only qualify for the benefit by reducing their accountable income by subtracting out-of-pocket recurring medical expenses like health insurance premiums and ongoing care. If their gross household income is below the income limit without subtracting any medical costs, you do not need medical deductions to generate a partial benefit if household income is low enough. As a first step, determine the applicable MAPR. In this case, it is a married veteran who is rated for aid and attendance. Next, calculate the anticipated household income for 12 months into the future from the date of application. Then estimate the anticipated allowable and monthly recurring unreimbursed medical expenses like home care and Medicare B for the next 12 months, beginning with the month of application. Subtract the estimated expenses from gross income to arrive at an adjusted income VA calls income for VA purposes, or IVAP, or IVAP for short. Step 3, add the applicable 5% deduction from the basic maximum annual pension rate to the IVAP. Step 4, subtract the adjusted IVAP from the MAPR to determine the yearly pension benefit amount. Divide the yearly benefit by 12 and round down for the monthly amount. You can see from this exercise, the larger the medical deductions, the larger the benefit. Medical deductions that are greater than annual income will generate the maximum pension benefit, equal to the MAPR for that category. Deductions totaling less than gross income will generate a partial benefit, as was calculated here. The definition of a healthcare provider is often an important element for a pension application. Licensed healthcare providers play a role in determining the medical deductibility of certain services. You see here the definition of a healthcare provider from the regulation. Further on, I will discuss the deductibility of care services from non-licensed individuals who are called in-home attendants and who are not considered healthcare providers for purposes of medical deductions. This could be members of the family, not including the spouse, friends, or members of a church group who are providing care for someone at home or in independent living. The need for custodial care is important for deducting food and lodging as medical expenses in independent living and assisted living, and for deduction of services of non-licensed in-home attendants. Custodial care means assistance with 2 or more activities of daily living, or ADLs, or supervision because an individual with a physical, mental, or developmental or cognitive disorder requires care or assistance on a regular basis to protect the individual from hazards and dangers incident to his or her daily environment. ADLs include bathing or showering, dressing, they need to be fed by someone, toileting or transferring and ambulating within the home or living area. Instrumental activities of daily living, or IADLs, are not considered part of custodial care and as such do not trigger medical deductions by themselves. IADLs can be included as part of the care cost when custodial care is provided in conjunction with the care services. Services of licensed home health care providers or assistants or aides of these providers are deductible as medical expenses. Services of non-licensed in-home attendants such as family, again not including the spouse, or friends or privately hired caregivers are deductible as medical expenses if the claimant is rated for aid and attendance and the attendants are providing custodial care. If the conditions I have mentioned are met, all other services provided by non-licensed individuals that are reasonably needed for the claimant are also deductible as medical expenses. Out-of-pocket costs for non-medical home care companies are also deductible as medical expenses, even if those companies are not required to be licensed in certain states. These medical deduction rules for in-home attendants especially for family members or friends, allow for a way to keep loved ones at home. A vast majority of people who need the aid and attendance of another person want to remain in their homes. Unfortunately, they have out-of-pocket maintenance costs for food, taxes, utilities, rent, debt, and other overhead that they must pay. VA will not give them credit for these expenses as medical deductions. On the other hand, in order to generate the maximum amount of pension benefit, these people have to pay their entire income for care services, which leaves them nothing to pay for maintenance costs. The extra income from VA pension is typically not enough to cover the difference. Because of these special provisions for not counting as income household maintenance costs paid by someone else, you can set up a personal care agreement from family members or friends who are willing to be paid for their services, who then turn around and pay certain bills for those people whom they are caring for, like food and utilities, as assisted living would. This allows these disabled claimants to remain in their homes and receive the extra income from VA. Just make sure the care payments happen every month indefinitely. VA does not generally recognize any services provided by independent living facilities as deductible for VA pension. Food and lodging are also not deductible as medical expenses as they are with assisted living, if the assisted living is also providing custodial care. In general, independent living communities are not licensed by most states to provide any medical care as part of their services. Fortunately, there are special circumstances where independent living can generate deductible medical expenses if certain rules are followed. Here are those rules. Any unreimbursed medical expense provided by outside licensed health providers are deductible as medical expenses. In addition, if there is a rating for aid and attendance, non-licensed family members can provide outside care, which is deductible if they charge for their services. This would exclude a spouse. The cost of food and lodging is not deductible as a medical expense except under the following conditions. The facility provides or the individual contracts for third-party health care or custodial care which the claimant uses, or the claimant arranges for his or her own third-party care, such as care from a non-spouse family member, and a physician states in writing the individual must reside in that specific facility and must separately contract with a specific third-party provider to include family members for health care or custodial care. Of course, under the scenario for deductibility of food and lodging, the cost of third-party care is also a deductible medical expense. So, for example, suppose you are helping a single vet who has $2,500 monthly income. He lives in independent living and needs third-party care. Suppose his room and board is $2,000 a month and he requires 10 hours a week of home care. If he contracts for home care and his physician certifies this, VA will deduct both the care and room and board. If, for example, he pays the third-party caregiver $800 a month, his income for VA purposes is zero. He'll be eligible for the maximum rate special monthly pension or pension with aid and attendance. Here are the medical deduction rules for assisted living. For a resident in need of custodial care, cost of the custodial care as well as the cost of food and lodging is all in total a deductible medical expense. For a resident who is not receiving custodial care, there is no deduction at all. For a married couple both residing in assisted living where one is receiving custodial care and the other is not, the custodial care for that single person as well as the cost of food and lodging for that person is deductible. The cost of food and lodging for the non-custodial care resident is not deductible. Here are the medical deduction rules for nursing homes. Any veteran who is a patient in a nursing home is automatically given a rating for aid and attendance, and all of his or her out-of-pocket costs for the nursing home are deductible. For a veteran, VA Form 21-0779 is used to confirm the veteran is a patient. For a non-veteran claimant, other verification as a patient is used. Federal regulations define what is considered a nursing home for VA purposes. On October 18, 2018, new regulations became law which define what VA calls a bright line net worth limit for pension and survivor pension applicants. Net worth is defined as income for VA purposes added to assets. For example, if an applicant has $120,000 in countable assets and $34,000 in income for VA purposes, which is a household's income adjusted for medical expenses, that household would have a net worth of $154,000, which exceeds the net worth limit shown here for this calendar year. Again, IVAP is defined as household gross income minus allowable unreimbursed medical expenses plus 5% of the basic maximum annual pension rate for that particular pension rate. Please note that income for VA purposes can never be less than zero to reduce assets. The net worth limit changes every year on December 1 based on the cost of living increase for Social Security and Medicaid's Community Spousal Resource Allowance. One thing I find interesting is the limit is the same whether the claimant is 65 years of age or 95 years of age, married or otherwise. VA has done away with their life expectancy tables. Any claimant with net worth over the limit will be denied entitlement whether he or she qualifies otherwise. If the net worth is spent down below the limit within 1 year of application, no new application is required. Simply provide evidence that net worth is now within the limits. One of the most important issues when considering pension entitlement, which we will discuss later, is to make sure income for VA purposes is reduced to the lowest possible value. Assets for net worth purposes are any checkings, savings, retirement, or investment accounts owned by members of the household. Assets also include the value of a business and the value of any real property other than the personal residence. This could include rental properties, raw land, or a farm, for example. Property value is determined at the time of application through various comparable records that support that value. It is important to note any voluntary purchases or transfers to annuities, trusts, or similar financial products made in order to transfer ownership or dilute the value of the assets through conversion to an income stream will still result in inclusion of those assets for the net worth test. Involuntary transfers to annuities, such as mandatory conversion of retirement funds into an income stream, are exempt from this rule. An effort to transfer ownership of assets going back to October 18, 2018 through any trust is also disallowed, and those assets are included in the net worth test. These voluntary transfers made to meet the net worth test could be subject to a penalty if an application is made within the penalty period or within 3 years of the transfers. The value of personal effects suitable to and consistent with a reasonable mode of life, such as appliances and family transportation vehicles, are exempt from counting as assets. VA will not consider a child to be a veteran or surviving spouse's dependent child for pension purposes if the child's net worth exceeds the limit. The primary residence of the claimant and up to 2 acres on which it lies is exempt as an asset. VA will not include a claimant's primary residence as an asset even if the claimant resides in a nursing home, medical, foster home, or other care facility, or the home of a family member for health reasons. Net proceeds from the sale of a primary residence while the claimant is receiving benefits are considered new assets and could result in loss of benefits. If the property is greater than 2 acres, VA will accept a certified statement that the extra acreage cannot be sold as evidence for exempting the larger lot. Otherwise, the value of the excess acreage is countable towards net worth. Under new rules, a claimant may not create pension entitlement by transferring assets in order to meet the new net worth limit. Any assets transferred after October 18, 2018 in excess of the net worth limit are called covered assets. Covered assets are subject to a penalty if the veteran or survivor applies for a pension within 36 months of that transfer. Beyond 36 months, there is no penalty unless the assets are periodically being used for the maintenance of the claimant. A transfer for less than value is defined as any voluntary asset transfer or purchase of any financial instrument that reduces net worth and includes annuities and establishments of trusts. Thus, gifting assets, transferring title without reimbursement, funding irrevocable trusts, and even converting assets into an income stream through annuities are all considered transfers for less than value and subject to penalty if the transfer creates a covered amount. It is important to remember any of these transactions prior to application, whether the net worth is already below the limit at application, are not subject to a penalty. A covered amount is only created if the transfers exceed the net worth limit. VA assumes any transfer for less than value within the look-back period, regardless of its intent, is an attempt to reduce net worth, but only if the net estate is above the limit at the time of application. If application is made within the 36-month look-back period, a penalty is assessed by dividing the covered amount by a divisor. You see here the current divisor for this year. The divisor changes every year on December 1, matching the Social Security cost of living increase. If the calculated penalty is greater than 60 months, VA will only assess the penalty for 60 months. Obviously, if you have a choice for a penalty that exceeds 36 months or waiting out the 36 months before applying, you would choose the latter and not create a penalty greater than 36 months by applying. The penalty is calculated by dividing the covered amount by the divisor and rounding down. This represents the number of months that a claimant must wait from the date of transfer in order to actually submit a valid claim. Generally, a rejection for a covered asset penalty will require a new application. Unlike Medicaid, where the penalty starts from the date of application, VA assesses the penalty from the date of transfer. This is important for planning purposes. It allows you to start the clock ticking on the penalty until you have everything to make application, which may be many months later. The date of transfer rule allows entitlement at an earlier date. In order to track asset transfers and assets in general, VA created Form 21-0969, the Income and Asset Form.
You can see from this slide that there are about 400,000 surviving spouses who are receiving dependency and indemnity compensation, or DIC as it is commonly called. Notice also that the majority of these individuals are age 60 and over. For those of you who work with seniors and provide assistance with veterans' pension or survivors' pension, be aware that there are about 480,000 veterans or their survivors who are receiving pension, which is just somewhat more than those 400,000 who are receiving DIC. They can't receive both at the same time. Out of these approximately 880,000 recipients of these two programs, if you are just helping individuals with pension, you are missing 45% of your potential to assist all senior veterans benefits claimants. There's just as much need for obtaining the aid and attendance allowance with DIC as there is obtaining the aid and attendance allowance with pension. It is important to remember that with any spouse survivor benefits, the survivor had to have been married to the veteran when the veteran died. There are extenuating circumstances where they could have been separated, but there must be no divorce, annulment, or any other court ruling that terminates the marriage prior to the veteran's death. DIC is available to a surviving spouse if the service member died while on active duty, or the deceased veteran had a service-connected disability that was either the principal or contributory cause of death. There is also a special rule that if the veteran was receiving compensation or entitled to receive compensation and was on claim for at least 10 years at a 100% rating prior to death, or at least 5 years at 100% after discharge, or at least 1 year at 100% prior to death if the veteran was a prisoner of war, entitlement to DIC is automatic for all of these cases and for the surviving spouse. If a surviving spouse remarries while receiving DIC, that spouse loses the benefit. There is, however, an exception. If the surviving spouse remarries after age 57, this person can retain the benefit. Also, if the surviving spouse has lost the benefit previously through remarriage and then turns 57, he or she can reapply for the benefits. As with compensation, where a veteran's military retirement pension is reduced by the amount of compensation, a survivor's military retirement pension, called SBP, is also reduced by the amount of DIC. However, Congress provided some relief for this loss of income through the Special Survivor Indemnity Allowance. Pause the presentation here to learn more. For a survivor age 57 and older, there is no offset with SBP. Here you see the current rates for DIC, including special allowances for the veteran being 100% disabled for 8 years immediately preceding death, as well as the allowances for the surviving spouse needing aid in attendance or being housebound. You can pause the presentation to look at this in more detail. Remember that the presentation is available as PDF slides as well. One important thing to consider here: if you are assisting a surviving spouse with pension, you need to find out if that surviving spouse might also qualify for DIC. She can't get both at the same time. However, DIC is a far superior benefit. There is no means testing, and the monthly benefit is more. And with the allowance for aid and attendance, the total monetary benefit is about 150% more than the survivor's pension. The information here is very important if you're going to assist with a DIC claim. As a general rule, if it is evident when the surviving spouse files a death certificate with VA that the survivor would be entitled to DIC, VA will automatically follow through by sending an application and making sure the survivor gets the benefit. Items 1 and 2 on this slide cover that scenario. Items 3 and 4 cover the scenario where the surviving spouse likely has no clue that he or she would be entitled to DIC, nor does VA have any clue. It is important that when you interview any survivors, you ask questions to uncover this possible benefit. Pause here to read more. This slide covers in more detail the automatic awarding of DIC pertaining to items 1 and 2 on the previous slide. If the veteran was 100% disabled or was paid at 100% for at least 10 years prior to death, or 100% for 5 years from discharge, or 100% for 1 year if prisoner of war, the award should be automatic. If the death certificate confirms the veteran's death was due to or approximately due to a service connection for which the veteran was receiving benefits or should have received benefits, the benefit should likewise be automatic. The surviving spouse will submit the death certificate to VA. VA will then send Form 21-534-EZ to be filled out and sent back with evidence that the spouse was married to the deceased veteran at death. If everything is in order, DIC will be awarded without the surviving spouse having to initiate the process himself or herself. Situations where the surviving spouse has no clue he or she is entitled. We run across these cases more frequently than not, and when we get a claim approved, the surviving spouse is always extremely grateful to receive the benefit. I will show you some samples further on of how to win these cases. In the meantime, here are the possibilities that would generate such a claim. First, the veteran was on claim, but death was caused by a secondary disability for which no claim was made prior to death. 2. The veteran was not on claim at death, but the death certificate lists a presumptive service-connected condition or secondary condition due to presumptive service connection as the primary or contributory cause of death. 3. The veteran was on claim and the death was service-connected, but the death certificate fails to list the service-connected cause of death. With any of these situations, the surviving spouse claimant submits VA Form 21-534-EZ along with the veteran's DD-214 and evidence of marriage, and if the death was due to presumptive service connection, the spouse submits evidence that the veteran was assigned or stationed at the location or dates to have been presumed entitled to service connection. If the death was due to secondary service connection, The spouse must submit a doctor's opinion the death was due to secondary disability, as well as establish secondary disability through a doctor's opinion. I will discuss further how we handle deficient death certificates. The spouse also submits a lay statement detailing conditions leading up to the death and the belief that the death was presumptive or secondary service-connected to a presumptive service-connected condition. In addition, the spouse submits all of the applicable medical records detailing the presumed or secondary service-connected condition which led to the veteran's death. A 100% disability rating for disability compensation pays a significant amount of monthly income for a retired veteran, well over $3,300 a month. Close to 20% of all veterans on claim are receiving disability compensation at the 100% rating. This is a significant number. This represents 1 in 5 of all veterans who are on claim. Many of these veterans are completely unaware that if they are receiving care services from private duty home care providers, care services in assisted living, or are in a nursing home, that they can receive another significant increase on top of their current 100% monthly payment if they become rated for aid in attendance or housebound. You can take the time here to examine the slide in more detail in your workbook, or if the presentation mode allows for pausing, please do it now. This extra income due to ratings for aid in attendance or housebound comes under a form of compensation called Special Monthly Compensation, or SMC. When you take the time to examine the slide, you will notice that with Special Monthly Compensation, a veteran with a spouse can receive well over $4,000 a month due to the need for aid in attendance or being housebound. If you suspect that you as a veteran might be entitled to this additional benefit, we will give you instructions at the end of this presentation on how to request that assistance. Aid in attendance allowances for the living spouse of a disabled veteran who is receiving disability compensation are perhaps the least known benefits for senior veterans. It is likely that most individuals who assist veterans with claims for benefits do not understand this benefit. If a veteran is at least 30% rated disabled or more, and his or her spouse is in need of the aid and attendance of another person, there is an additional allowance available to the veteran. The allowance goes up with each 10% increment increase in disability rating. This means there are 8 different allowances between 30% and 100%. It's not a lot of money, but for those who are entitled to this benefit, there is no reason not to apply. It's a simple application, and our organization can help you with it. The Department of Veterans Affairs Healthcare Division is the largest single provider of comprehensive medical care in the United States. The Veterans Health Administration, which is the division which is responsible for health care, employs well over 350,000 employees and serves well over 9 million enrolled veterans. Enrollees represent about 48% of all living veterans. There is a misconception among many veterans that anyone can walk in the door of the VA Medical Center and enroll in the system. This is not true. There are 12 different ways a veteran can gain entry into the system. Most of these are related to certain tours of duty or to being in receipt of disability benefits. VA does allow certain veterans with low income or who are catastrophically disabled into the system as well. With the exception of those veterans who are in the system based on income, all services are free except for prescription drugs. For veterans who are receiving long-term care services at home, a one-time grant of $2,000 for those veterans rated for aid and attendance with pension or who are on Medicaid is available from VA Healthcare to modify the home for disability. For veterans who are receiving compensation due to service-connected disabilities, VA Healthcare will offer a one-time grant of $6,800 to modify the home for disability. VA Healthcare also offers a wide range of long-term care services, which could include care management, as well as home care services for residents of assisted living. I will address the prescription drug benefits from VA Healthcare, as well as free hearing aids, free hearing aid batteries, and free eyeglasses further on in this presentation. Free hearing aids, free hearing aid batteries, and free eyeglasses are a definite benefit to being enrolled in VA Healthcare. If, for example, you are currently receiving pension or the so-called aid and attendance benefit, you are eligible for VA Healthcare and for these free services. Or, more commonly, we help many veterans who are not currently receiving any disability benefits with hearing loss claims, which, as I have mentioned before, are fairly common and represent 60% of all claimants. Once we get the 10% rating for hearing loss or tinnitus, the veteran now has access to free health care from the Department of Veterans Affairs, as well as the benefit of low-cost prescription drugs. This free health care benefit includes free hearing aids, batteries, and eyeglasses. Some veterans who received the Purple Heart due to combat may not know that they are also eligible for VA health care. Enrollment in the VA healthcare system also gives the veteran access to many expensive prescription drugs, which at the most might cost $11 a month per prescription. The prescription drug program is a three-tiered copay program starting at $5 a month for preferred generic drugs, $8 a month for non-preferred generic drugs, and $11 a month for name-brand prescription medications. For some enrollees in VA healthcare, prescription drugs are absolutely free. As an example, I take a very expensive medication that even with my Medicare drug plan coverage would cost me over $8,000 a year out of pocket. It would cost me $24,000 out of pocket each year if I did not have Medicare drug coverage. I am also enrolled in VA healthcare, and that drug is absolutely free to me. Over the years, I have talked with many veterans who know I help with applications for benefits and who tell me that they need to get into VA healthcare in order to get their very expensive prescription drugs at virtually little cost per month. I have to explain to them it is not that easy. First of all, as we already know, not just any veteran can get into VA healthcare. Furthermore, using VA healthcare as a way to pay for expensive drugs being prescribed by doctors outside of the VA healthcare system is not that easy of a process. Yes, VA will pay for prescription drugs ordered by private sector doctors. However, the person desiring this service must be enrolled in VA healthcare, must have a primary care physician with VA, must meet with that primary care physician on a regular basis, and the primary care physician must provide a prescription for VA healthcare to pay for an outside drug being prescribed by a private sector doctor. In many cases, the VA doctor will not agree to have the healthcare system pay for outside prescriptions, especially for the very expensive drugs that are on VA's formulary list called restrictive use drugs. The Department of Veterans Affairs does offer burial benefits depending on the status of the veteran when he or she died. Veterans who died as a result of a service-connected condition are given automatically a one-time benefit of $2,000 to help cover the cost of a funeral and burial. Veterans who died and were on claim for pension or disability compensation, but the death was not due to the condition for which they were receiving benefits, are entitled to the lesser one-time payment that you see on this slide. This second one-time payment increases every year with inflation. The first $2,000 does not. All deceased veterans and sometimes National Guard and Reserve members who die can receive free burial in a state VA cemetery and in certain federal VA cemeteries. Burial in VA cemeteries also includes the cost of opening and closing the grave. This burial plot, if not used by the veteran, can sometimes be used by a surviving spouse. All veterans, regardless of whether they were receiving benefits or not, are eligible for the following: a grave marker or the equivalent monetary allowance for a grave marker, a flag for the coffin, a graveside honor guard, and a recognition from the President of the United States. Thank you for attending this presentation. I covered an awful lot of information, and I appreciate that you hung in there with me. I hope it was rewarding for you, and I hope that you have received some valuable bits of information that will help you increase your income or provide for additional benefits from the government.